All right, welcome back for the episode of This Week in Charts via Conover Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on ConoverTrades.com for swing trading alerts and analysis. Anyways, let's get into it here this week. So markets taking another dive. So Monday we had a little bit of an up day. Then 1, 2, 3 right in the middle of the week. Pretty good selling taking place into the end of the week before we got a little bit of a bounce. And notice the trend line, right? We've been talking about this trend line for a while, as well as the bigger one here going back to the October lows and connecting the March lows. Eventually, I do think this gets hit. But again, we did break that shorter term trend line and we closed well below the 50 moving average there. You can also see the triple Qs as well doing the same thing. So a pretty good slice there, down 1, 2, 3, 4 days in a row, although it did bounce and come off the lows on Friday ultimately. And again, I've been talking about this trend line really for the last several months, that eventually we should get back to this at some point. And then I think you can get a much bigger bounce potentially. But in any case, markets coming in, what were the catalysts here? Well, we were fading a little bit earlier in the week regardless. And then we had the Fed minutes on Wednesday. And that was really kind of the catalyst. So the Fed minutes came out and essentially there was more of a hawkish tone regarding inflation, right? And it was the statement that inflation is, starting to bottom. And again, this is something I've talked about here for the last several months, that inflation is going to bottom and it's probably going to crop up again. And bond yields are telling us that. And the Fed governors, essentially mentioned that in the meeting. Now, these Fed minutes meetings are generally pretty priced in. It's not that you don't generally get a big move off of them, although we did start to see that. I think what the bigger move was, and we can flip over here to the news that came out right after that. And this is just how it works. It was a few hours after the Fed minutes. China property giant Evergrande files for bankruptcy protection in Manhattan court. That was a big headline. And again, you start to see the selling, and I thought to myself it was a little strange to see us sell off as hard as we did on the Fed minutes, but then a few hours later, that's what comes out. And someone always knows, right? Somebody always knows the news before it happens, and we did get some follow-through selling Thursday and into Friday, although we did start to come off the lows a little bit. And I do think at this point, if we go flip back over to the spiders here, I think we are getting close to at least a short-term bounce, where we'd probably go up and test maybe this trend line here again, and possibly that 50 MA, and then the potentially even the 20 moving average. So again, we kind of went into this chop zone, right? So there's a lot of demand in there. There should be, if we go back to a 2-year look, you can see, we basically back tested this pivot very close, it's not perfectly, and then there's a pivot there, right there. So there's a lot of support. You got the 100-day moving average. If we flip over to a weekly look, you can see that we have a 20-week moving average right here. So we are into a little support zone. I do think the market can get a bounce, but again, I'm still expecting the market to remain under pressure, really until into the fall, right? This is just how it works. It's seasonality. This is the roughest season for the market, especially in an up year. This is usually when you get your correction. And, looking at the NASDAQ up 45% year to date at one point, it's not too much to ask for a pullback here, or for some type of a down move, maybe even bigger. There's lots of talk, about the yen and what's going on over there. The word credit, or I should say term credit event, is getting thrown around a lot. I certainly think it's possible, especially if crude prices continue to put pressure on the yen. I'm not going to sit here and say that. I don't like making crash predictions, but it is something that needs to be made aware of. But for right now, short term, we'll look for, I don't see much more downside than 430, 431 there for the spiders here. In the near term, then ultimately, I think you get down to, you can get down to 410, 415, possibly lower. But again, I like to just take it one level at a time here. And that's what we're going to do here. But markets coming in off the highs. We did see consumer staples, kind of risk off names get a little bit of a bit. If we look at the XLP, that's starting to come off the lows there. And, if we look at some of these kind of valuation metrics, you take a look at like the U.S. stock to bond ratio. This is absolutely, parabolic here. So again, this is to the 10-year note, not the yield. So stock's getting expensive. Take a look at, another chart here, equity risk premium earnings yield versus the 10-year yield, it's at basically a 20-year low. And you might say, well, 2004, we had a bull market. Difference is the 10-year yield was falling then, and it's rising now. So you get, that dynamic's a little bit shifted there. So again, you're seeing kind of that finally that move to risk off, and utilities even getting a small bid there. We'll see if they continue to outperform. That is a sector that can outperform, especially as we get to recession. Speaking of recession, one last little chart here before we get through our usual stuff. Take a look at the 210 spread. So that is starting to come back up off the lows there. And if you know your kind of financial history or your correlations history, generally when this starts to uninvert, that's when the recession is getting much, much closer, and we're getting there. 3-month and 10-year there as well, coming off the lows. Although it still has, let's not make any bones about it, there's still a long way to go. But you see the 5s and 30s here, and 10s and 30s are both uninverted now as well. So could be something, could be the start of something. Might take a while. It does take some time. Maybe it's not until Q1 next year. But in any case, a little bit of a broad picture there of what's going on there in the markets. We do have Nvidia earnings, and then that'll be on Wednesday, so that will be important for technology and the market. I mean, Nvidia is the 6th largest company in the NASDAQ 100 now, so it's arguably one of the most important companies in the market, period. So that will be market moving. Maybe that's what's the catalyst for a bounce if we can get, if they can get, a positive report. And then the all-important Jackson Hole will be on Friday. So for me, my kind of game plan going into that is, if we're up into that, I would expect a down move. If we continue selling into that, I think that's where you get a bigger bounce in the market. So, and that's just generally how it works. The more priced in, the more selling you see before a volatility event, usually the more likely it is that you're going to get a bounce, and vice versa. So that's kind of what I'm looking for here. Again, on the upside, spiders. This back, a back test of this upsloping trend line, 50 MA, 20 MA, those are your upside targets. Downside, really, I don't see much past 430. If you do break through that, again, you're going to have a ton of support at this trend line. So, and I don't foresee us crashing through that before Jackson Hole. That would be very, very unusual, unless we had some type of exogenous event there. So, but anyways, that's what I'm looking at for triple Qs here. Same thing. So, you have a lot of support here with this pivot. There's that green bar that we reversed from, and then of course that coincides with the 100 moving average, as well as this trend line there. So not a ton of downside for the Qs here in the near term, and then I would say 370, 50 MA, 20 MA is your upside targets. The Russell did have a bit of a breakdown this week. It did manage to save, if we flip over to a weekly here, we did manage to save this green bar low on a weekly time frame, so that is a big positive. We did hold this old trend line right there, but it did, sell off pretty sharply. I mean, from the most recent peak, we're at basically 199 all the way down to 182 here in the last couple of weeks before coming off the lows. So Russell in some trouble here. And again, kind of seeing a move, small caps are considered risk on, obviously. So seeing a move out of that makes a lot of sense here with the markets on edge. Upside, you could probably see up to, I would say a move to 190 or so in the near term if we break through that, going all the way back down to this blue trend line. So be careful with the Russell here for the Dow, all the way down to our level. We talked about this for a while, 343. That got a hit, and we bounced off of that. 350 is now going to be resistance on the upside. If we break back below that, we'll look at 338, 339 here in the near term for the DIA. Semiconductors here, again, coming down this week, although they did save that little reversal bar by Friday, so that's a positive. I would say upside here in the near term, maybe up to 150 short term, then maybe 153 to 155. And then of course this trend line, been talking about this for a long time as well. This should get hit at some point. If you break that, there's an air pocket really all the way down to about 128, 129 with that 200 moving average there. So semiconductors teetering, but again, I would say the more they sell off into Nvidia, the more likely we get some type of a up move there. But looking at not to harp on Nvidia here, but the AI story, it's very tired out at this point. And if you look at some of these semis, Qualcomm, they did poorly on earnings. TSM did poorly on earnings. AMD, all these AI plays or semiconductor plays. It's clear now that the demand is just not there for those chips. At least not now. It's not to say that they can't grow into that, but these valuations are absolutely absurd at this point. And Nvidia has staked essentially their entire quarter on AI earnings, right? And it's not likely that we're going to see that anytime soon, but who knows? Maybe the market can get one more kind of irrational bid there. But that's what we're looking at there on the semiconductors. Over to cloud software here. IGV, this had a breakdown this week. So last week we talked about this level here, 338.39. We closed below that this week. So that is a confirmed break on the IGV. So that means you're probably going down to about 317. If you get through that, it's 305. Again, remember, it's not going to go down in a straight line. There is some support at the 20-week moving average. There's this trend line right here, so we can still get a bounce. But I don't like you getting a weekly close below that green breakout bar. Big sign and a big negative there for cloud software. And that's a big weakness, big negative there for not just cloud software, but for technology and for the whole market. Dow Transports here also coming back in. They held our 15.5 support level. We've made note of that of late, and it did close just fractionally back above the 50 moving average. So that is a positive here in the near term. Upside resistance, we'll say 16 whole round number, and then 16,250 are your levels on the upside. If we start to sell, I mean, there's not really a lot of support here on the transports till about 15,000, and that's just a daily chart support level. Your bigger level is going to be all the way down at 14.5. So transports here, they had a nice run, but didn't build really much support on the way up. And that is my concern there. But short term, probably should get some type of a bid here. Over to interest rates. So again, yields still holding up really well. We talked about the yield curves a minute ago. But you can see 2-year here finishing at 4.949. No problems here. Again, if that gets above 5.33, it is a big negative for the market. That is where the effective Fed funds rate is. So keep that on your radar. 5s, 10s, and 30s also holding up really well. 30-year into double top, as is the 10-year right now. There's your double top. One more pullback that can go through that. So just be aware of that. Yields are still very strong, and I don't see any problems with them at the moment. Housing, finally, XHB. Take a look, guys. So XHB, big slice here Thursday, Friday. Broke this entire consolidation pattern. And if we look at the weekly, that's 1, 2, 3, 4 weeks, almost 5 weeks worth of trading wiped out really in about a single day. So XHB coming in very sharply. It does have some short-term support here around 78. If you lose that, you're going all the way down to this purple trend line. So XHB finally getting sliced there. Well overdue if you ask me, but markets kind of work on their own time. There's the ITB again into the 8250 levels. There's some daily chart support there with that green breakout bar. The bigger level here is going to be right around 77.50 to 78. So home builders defying gravity, but finally coming off the highs here. They have been high on the hog for a long time. And again, I just talked about interest rates. You get that 10-year to go through that level. Maybe that finally pops the balloon, so to say. Market's been operating on this thought that yields are just going to come back in, inflation's defeated, and maybe it's finally time for these to crack here, but they did come in off the highs finally. VNQ here going into our trend line. Talked about this last week. I said if we break down, we're going to go to this area. We did, and it got a bounce. So we'll leave it at that for now. Short-term resistance about 83 and then 84. If we get through that, you got a trend line here at 78. I don't see it getting through that at the current time, but REITs did break down this week. XLF here also broke down. We've got a trend line right here. What is that? That is our weekly green bar low. That was our breakout bar. We closed below that. So financials also on the weak side. Look at this upsloping trend line here. That's probably where we're going to be headed. Doesn't mean we can't get a bounce before then, but XLF coming under pressure here. KRE coming under pressure, just closed ever so slightly above this trend line. It's definitely lost that bullish structure though. So definitely kind of getting neutral to bearish here on the financials. KBE, the large bank ETF, holding up a lot better though. That's still above that technically inverse head and shoulder pattern. So that one still is safe for now. But financials definitely giving up that nice bullish pattern that they had over the last couple of weeks and coming in. Broker dealers also coming down as well. Had a nice pop on Friday, up 2%. Remember, these guys benefit from volatility, so sometimes when you get a spike in vol, they can benefit from that. But it did hold the 50 MA. In the short term, we'll look for a move to 500, maybe 510 if it can really bid up. Okay, over to commodities here, and we'll start off with crude. As always, so crude backing off a little bit this week, although it did finish, above the 80 handle. And I said this last week, I think it just needs to do some consolidation, maybe 2-3 weeks, maybe even a little bit more. But again, short-term support's going to be around 77, and obviously resistance is 83, 85. If we look on a weekly, again, we just got really overbought here, 7 weeks in a row up, and then just into this resistance pivot. So not surprising, just needs to do some consolidation, backing and filling, and then I think it is a move up into the low 90s for crude. So that is still hanging in there really well. Speaking of energy and energy equities, XLE has been a powerhouse. This has really been the champion of the market. Even on Friday morning when the market was gapping down, take a look here, gap down, and immediately went green and was green all day. So energy really doing a lot of legwork here for the S&P, keeping it kind of buoyant as technology and a lot of other areas sell off. I like the chart here, and that should get a nice push up into the low 90s. XLE is still holding up really well. XOP, still overbought, but again, continuing to hang in there really nicely. Still above that 20 moving average. If we get above 150 on a weekly close, this thing's going all the way up to 160. So XOP still holding up. OIH still holding up. Still looking for that to get into that 100-month moving average around the 370 handle. So energy still really strong here. Oil still really strong. Rig count falling. Fundamentals very good. We talked about this before. Second half of the year, energy should really start to get going here. Nat gas finished fractionally higher. That continued to pull back a little bit this week, watching this trend line here. Again, obviously we hit $3 a few weeks ago. Would have been very surprising if we just broke right through that. Shorts are set up right there. So it is pulling back here, but if this gets one more higher low, it's going to make another run at 3, and I don't think it holds if it's tested again with a secondary higher low. But nat gas still stuck in the range for right now, but testing this trend line, we'll see how that performs into next week. Uranium also having a nice pop on Friday. URNM there, we see that up 3%. Again, nothing's really changed here. Still holding up, nice chart. That big reversal bar, we talked about that. We scooped around, and then nice little inside hammer candle this week. Again, target still remains around 38, 39, and then possibly up to 40. But not a terrible pattern there for the URNM. Cameco is also holding up really well, and that's basically at 52-week highs. So I don't see any issues here in the uranium market. DBC we talked about last week. Again, still doing some backing and filling. I don't hate the pattern. A nice up move, pull back there. You want to see it kind of hold that 200 moving average preferably, but still technically, as long as you're above 2350, there's no real issues there. Just doing weekly chart consolidation right now, and ag still holding up relatively well. MOS doing some more backing and filling. That can still put in a higher low, and I like the pattern here on Intrepid, as I've told you. If you can consolidate a little bit further, this can get a push up into 3250. NTR, a lot of my members own this one. Backed off into the 90 handle. As long as you hold this, 60 handle, retesting that breakout. And again, these kind of ag names still just putting in weekly consolidation here. So nothing really too new to update, but they still look okay there on the bigger time frames. Dollar index, let's flip over here. All right, so the DXY here, that did back off a little bit this week, but again, still holding up really well, right? So let me get our lines on here. Okay, so we got above, I'm trying to get this exact, there we go. So we got above this pivot here, and then kind of just stalled out. This level here, 103.75, is going to be your big weekly level on the DXY. So that is this red bar high. Remember, we had a bullish inside bar, green candle inside of that. That broke down, right? That's when we went neutral to bearish on the dollar. Then that turned into a bearish inside bar, right? And then we broke down. We closed above this, and you gotta stay with me here. We closed above this bearish inside bar, the breakdown bar. Now we need to close above this one. If you get a weekly close above this, then I think the dollar bears are trapped big time, and you probably get up to the 106 handle, maybe even a little bit higher. Doesn't mean it's going to happen in a straight line, and there's still work to do, right? You still have to get through this. You still have to consolidate this and push through, but dollar acting really well, and I wouldn't bet against it right now. So I'm not saying that's a license to buy, but I wouldn't be short either. So dollar index acting well, and again, you get risk off. That can be the case still. I know there's lots to talk about the bricks and all that, but Bottom line is, if there's a risk-off event today, the dollar index will bid. It's really that simple. At least for now. But anyways, gold here coming back in a little bit, still just kind of a controlled demolition down to that 1900 handle. I still think that's where it wants to go here in the near term. There's 200 MA. Weekly, we got to go back farther. There's your weekly trend line. So that should get hit probably even next week, I would assume. You know, especially if we get hit into Jackson Hole, maybe it gets a bid off of that. Could be a thing. If you get through that, again, I'm still looking for 1830 to 1850 if we do break through that trend line. So, and then on the upside, you got to get through 2000, then you can go to 2050. So that's what we're looking at there. For gold, for silver here, it's continuing to back off this week, but it did get a little bit of a bounce. Should have the resistance at 2350. I want to get this at 21. I think that's where it wants to go, and I like that as a buy level. So I'll be watching that over the next couple of weeks here, but you know, metal's still under a little bit of pressure. Platinum did get a nice pop Thursday, Friday. Still think that gets down to probably into this range, 860 or so, maybe even 850. And I think that is a buy level as well. Palladium got a nice bid last week. I wasn't in love with it, as you guys know, and then it came back in this week. Still looking for that to get sub 1100. Copper pulling back and then getting a bid Thursday, Friday, closing just above 370. 380 to 383 is resistance right now. If we do push lower, you guys know we're looking for a move to 340. Okay, so on to Bitcoin. So Bitcoin did have a bit of a breakdown this week, and we did sell off pretty sharply. There was rumors that I'm not even sure if they were confirmed, but SpaceX dumped their entire position. Big sell-off. Part of me is wondering if they just dropped this before the ETF news to run stops. But either way, if we're on a technical basis, all we're going to watch here is this level, 26,331. If we get a close Sunday night below that, then this inside bar pattern has failed and Bitcoin goes a lot lower. It's really that simple. So it was bullish Bitcoin, and you know, as long as this pattern held up, if it closes below that, then we're bearish Bitcoin. It's really that simple here. Again, Sunday night close at 8 p.m. If we're below 26,331.93, which we are sitting just above that right now, then it's a failed pattern. If not, then believe it or not, I've seen it happen before. It doesn't look likely, but I've seen it actually play out before. So as long as it holds that low on a closing basis, you have to respect it. Again, it's much less likely given the pattern has just been, the structure has been broken, but it's still technically holding that support level. So we'll see if we can get a bounce. Maybe you get the ETF news and maybe there's some short covering off of it. Certainly could be the case here. Again, I have the suspicion that they ran stops ahead of that. But either way, Bitcoin with a breakdown here. Ether too, just to look at that. We haven't looked at it in a while. You can see here, upsloping trend line got broken. And I mean, that's a pretty clean break there on Ether too. So Bitcoin's still trying to hang on by the skin of its teeth. But again, watch that level there on the Sunday close. That will tell you the direction moving forward. Anyways, let's get back over to the spiders really quick. So again, short term, again, watch Nvidia earnings Wednesday. And obviously Jackson Hole. Upside, we're looking for probably 445, maybe even 448 or so on the spiders. And then on the downside, I don't see a ton this week. You know, I would be surprised if we, got much below this 100 period moving average this week at least. But if we do, and we do at some point, again, we'll look down to this 420 level, which is, coinciding with this trend line as well as kind of, these, if we look at a weekly, there we go. That's kind of where we broke out of. So that should be support there on the downside. But again, lots of news this week. Obviously, Nvidia earnings in Jackson Hole. For up into Jackson Hole, I have downside bias. If we continue to sell into Jackson Hole, I think you'd see some short covering and vol selling after that. Anyways, guys, I'm going to wrap up here. You guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. I'll talk to you guys all next week.